What is good, YouTube? Oh my god. This is the third time I'm recording this now. The third time. The first time I recorded the whole thing and the face cam wasn't on. The second time I recorded the whole thing, the face cam was on. My mic wasn't on. So I'm just double checking it's definitely on now. Okay. This is on, that's on, this is on. Let's go. This is gonna be quick. We're going to get through this. No waffling, no nothing. We're getting through this recap quick. Right, so pre-market. I don't want to talk about pre-market today. I didn't really look at too much. Well, I did, obviously, but for me, good draws on liquidity to the downside. Hourly low, hourly low, hourly low, 4-hour low. Okay, that red line there, 4-hour low. Now, why I say I don't want to really pay much attention to pre-market today, because I think a lot of my trade was based upon being reactive today, and just listening to what the market was telling me. I think sometimes my bias is built strongly upon the information pre-market. Today, to me, there wasn't a lot going on to go off. We're all-time highs. You really should be longing, as we can see today. But for me, there was too many obvious draws to the downside that were strong. There was too many confluences that were hard to ignore. And at the end of the day, that's what I went with. My strategy was pretty much down to a T what I would usually go for. So I'm not mad at my trade today. I lost $1,415 on the day, as you can see there. So, we're going to start the week off with a loss. We're going to start the month of June off with a loss. But it doesn't matter at all. As you can see, by May, things change very, very quickly in trading. One win makes all of that back and more. Obviously, depending on the size of the win, but here, look, back-to-back wins. That is a great week. We start this week off break even, loss, back-to-back win, completely changes. Start the week off here, loss, big win here, changes, back-to-back losses. Doesn't really matter. 2 break-even days, big win, small loss. What do we end the month up? 13,000. It is pretty much simple maths. Reduce losses, reduce risk, and when you win, your profits outweigh your losses. It's as simple as that. Do not look short term, look long term. This is a great example of short term thinking. Anyone that looks at that and goes, oh, I've lost today, get on with it. Get on with it. That's all I can say to you. There's been so many times in the past where I've got annoyed. I've been sat there thinking, fuck's sake, I've lost today. Got annoyed, like, punch something, shouted. I don't know, got angry. But now I just go, put my phone down, get on with the day. There is no point stressing about it. And there's always going to be days that are tougher than others. You could lose a count to get it. That's tough. But I think the more it happens and the more you learn to accept it, the easier it becomes. This, to me, today, absolutely fine. My risk was good. My strategy was good. I thought my trade was good. And obviously, I've been through this trade twice now. So I'm quite fully aware of what happened today. And I'm completely fine with it. I think if it had happened again, I would have taken the exact same trade. Sometimes the market just doesn't go the way you want it to, and you've got to learn to accept that that is trading, and that is what happens. You will not get 100% of the trades you take right. You will not be profitable every single day. Everyone wants to be profitable every day. Everyone wants to win their trade every single day. But guess what? No one does. So the ones that are successful, the ones that are profitable traders are the ones that learn to accept that that is a fact. So that's a little pep talk for today. Just learn to accept that these days are normal. And again, as I've said quite a few times now, just zoom out and look at the bigger picture. So let's go through today. Let's go through what we saw. So the only thing I'm going to point out pre-market is this move down here. So this 15-minute leg, because it actually becomes quite important to a bit later on in the trade. First thing I want to just highlight is this 15-minute break structure just to the downside. So as you can see, we moved down below this low here. We broke structure on the 15-minute there. Now, one thing I do want to point out on higher time frame that later on was a confluence builder for me was this 4-hour inverse fair value gap here. Obviously, higher time frames hold higher power. We made a move down and we created this equal low here, but I'll go through that in a second. But the main thing on the 4-hour is this, is that we inverse that gap there. Now, as I said, on the 15-minute, we made this move down and we created equal lows to this hourly equal low. Again, an important step in something we're going to circle back to later on. So we've now got this equal low here and these hourly relatively equal lows. To me, that is a super strong draw on liquidity. Now, from here, we're going to scale it down to the 5-minute because we've got that 15-minute breaker structure. I was open to a very early trade today. If price had have retraced up into this 5-minute gap here, and we had got confirmation, so where this candle closed, if we'd have got confirmation out of this, which I'll show you we didn't, so on the 1-minute, this move up here, if we'd have maybe broke structure below this low, or we'd created an inverse fair value gap move up here and we'd have inversed it, I would have entered off that. You can see we didn't actually break structure below that low here, so we didn't enter there. There was just no signal to me for this move up here where we respected this gap to enter off of it, so we didn't. Sometimes you just got to sit on your hands and be patient, and that's an example of it. I didn't get FOMO, I just waited, and guess what? If we'd have made that move down without me, that's fine because I didn't get confirmation. And the one thing I do want to point out is on this move down here, if that move had gone without me and taken these draws on liquidity out, I wouldn't have traded today, because, and this is the reason why. Now, when we moved up into this range, I wanted price to respect this range. At first we did, the second candle closed and we didn't. I was now actually looking for a reversal because typically what my strategy would be is, sweep liquidity and then a reversal the other way. So you would want confirmation that price is going to move higher. Confirmation would be that, we closed above this gap here, we inversed it, we then look to respect this gap here, which I'll come on to, and then make an extension up. Now, when I inverse this gap, I marked out these 5-minute highs here because they were pretty much stacked just on top of each other. And it would have been quite a nice draw. And as you can see, we moved smoothly through it here in the end. Now, I marked them out, and the top one here was an unfilled 15-minute gap that I had marked out. So the reason why I marked them out is, as I just alluded to, we we inversed that bearish gap there. I was now looking for bullish confirmation that price would have gone higher, and then again I wanted price to come down, respect this range here, but we didn't. We inversed it, we created a new relatively equal low to the already equal lows that we had formed. And as I just mentioned before, if this move down now would have disrespected this range and swept these levels out, I simply would not have traded today, because to me, it would have taken the levels I wanted to target out. and I wouldn't have waited for this gap here to have been inversed again. I just wouldn't have traded that. The reason why I ended up flipping from being bearish to bullish to then bearish again was just because of what price was showing me. And this is why I didn't want to go too much into what pre-market said, because I was being a bit more reactive today in terms of what price was trying to show me. So we inversed this gap here, which I just showed. We created this new equal low, and what I wanted price to then do before I traded was move up into this bearish gap here, and also with that you would pair that with equilibrium, so that high up here down to this low here. Obviously you've got the midpoint here, which is a discounted range, and price tap into that, respect that range there. And to me that's a pretty good sign that price, if we get confirmation out of that, would move lower, and built upon these draws on liquidity, two equal lows, 2 hourly relatively equal lows. To me it doesn't get much stronger than that. And yeah, we moved up into this range. Obviously you can see where this candle closed here, we were still respecting that range, and that was where my entry was. So we moved up here, and my confirmation for my entry was this. So we moved up into this range, and as you can see, we've got this. I'll go through this S&T in a second, but my entries, my confirmation for an entry is either a break of structure or an inverse fair value gap. Now, sometimes I will enter off of S&Ts, but I think it has to be a very particular setup and something that, when I see it, it's something that I've seen time and time again from, just market experience, stuff like that. But typically I use an SMT just to help strengthen a bias. It's not really something I would go SMT enter off of, especially a 1 minute, because you could mark out so many SMTs on a chart, but you're not going to enter off of every single one. To me, it's just to help strengthen a bias. So as you can see, we had this bullish gap open here. On NQ, we moved above this high, swept this high. On ES, you can obviously see here, the one I have marked out is we didn't sweep that high out here, we stayed below it. And when we moved lower and inversed this 1 minute gap here, it just helped me strengthen that bias to believe the price would go lower. So I did just have it marked out, and you can see on this candle closure here, this 1 minute inverse of this bullish gap, we entered the trade, and this here just would have been a break-even point. So I think it was a 5 minute, I want to say a 5 minute low. I could be wrong on that. Bear with me. Yeah, it was. Yeah, it was just a 5 minute low. So once it moved past this range, whether that was a candle closure or if it would just wicked it, I don't know. I think I would have just been cautious with how price was moving. Nevertheless, we didn't get that far down. In fact, we pretty much reversed as soon as I entered. So yeah, that was the trade today. Unfortunately, price didn't go the way I wanted it to. To me, I was convinced that it would take out those draws on liquidity, especially with the confluences we had built up. And just to sort of recap, going through those from the higher time frame downwards, we had 4 hour inverse fair value gap. We had a 15-minute break of structure. We then respected a 15-minute range, which I don't actually think I went through. Honestly, I've done this recap so many times, I forget what I've been through and what I haven't. So I do apologize. But I'm just going to show you just in case that I haven't. So obviously we had that 4 hour inverse fair value gap, this 15-minute leg down. We then respected this 15-minute bearish gap. We then had a 5-minute inversion down to the downside. We then had a 5-minute confirmation that price was respecting that range there. So we respected that range. And that was my continuation confluence. And then there we had 1 minute confirmation that price would move lower with a 1 minute SMT as well. So when you put all that together and you piece it together from top to bottom, it's pretty much what I would want for a setup. And then just to help strengthen that, you've got a relatively equal low to two equal lows, and then you've got two relatively equal hourly lows um, on top of that. So all in all, I think that is a pretty strong trade. That's the trade I took. The risk on it was pretty good. I think on two of the accounts it was $483. On one of the accounts, I think it was $453. And one of my goals was to reduce the risk. So originally I was 800 per account. Since we passed the accounts, I wanted to minimize that risk just to give me a bit more wiggle room if required. Now we've obviously got the past account, so no more than 500 and certainly no more than 600. So 600 is the absolute most, but where possible below 500. Today we did that, and this is exactly why, just in case, just to help manage that risk. And just to quickly go through where my stop loss was positioned today. Usually I would probably have it on that high there, because anything above that probably would have invalidated the idea of the trade. But I just decided just to leave it just a bit more wiggle room. I think looking back at it, it probably wasn't needed, because my idea behind it at the time was, if it were just slightly wicked above this range but respected this gap, this 1 minute gap here, it maybe could have reversed off it. But I actually don't think it would have been enough room to wick this and stay in the trade. I think if that was the idea, I probably should have gone just the top of that body there, just to allow me enough room, like this move up did before making this leg down. So as you can see, the idea behind what I actually wanted was this, and it actually did happen for a short part. So as you can see, we moved above this high here that would have been my actual stop loss, but the idea behind it was, in case it moved above that but respected that range. Now as you can see, that did happen, but because of where my stop loss was, I didn't allow myself enough room to let it wick past that and respect that range, if that makes sense. So I think where my stop loss should have been is the top of that body there, and as you can see, that would have allowed me enough room to potentially still stay in the trade. But as you can see, price would have gone on to stop me out anyway. So technically, I've saved a bit on the day there, but I think, looking back on it for future reference, and a bit of a learning curve for myself, if I'm ever going to do that, just allow myself a bit more space to work with, then don't just place it on the top of that fair value gap there, because I'm not really doing too much for myself, other than, if that does happen, it's just very fortunate, because I don't think price ever just ticks past it to here and then moves down. I think that's very rarely going to happen. It's more going to be, something like that, where we move past it, respect that range that I had marked out, but and then move lower. So if that had have happened, looking back at it, I think I probably would have been a bit more annoyed at myself. But price ended up moving up and moving quite a bit higher on the day anyway. So not too mad about that as it is. Just take that as a bit of a learning curve. But yeah, that's the trade for today. So as always, if we trade again tomorrow, we will be back. And yeah, for now, just like, subscribe, comment, share, do whatever, and I'll catch you guys in the next one. Peace.